Hi, Mike Swanson of Wall Street Window with you today, and I got to give you an update about what's going on in the stock market because we've had a couple really nasty down days in the Nasdaq, and today the market is up a little bit, and people are wondering should they buy right now? And I don't think you should, not yet. We are in what I believe is a market correction that's not over. And if you're patient and wait it out, you'll be able to buy into some really powerful sectors and take advantage of the correction. I'll tell you how to identify the right things to buy in just a second. But first of all, I've got to tell you to be very careful about this market. And don't just get fooled because we're up today. And in fact, I wouldn't be surprised if we don't see some more up days in the next week or two because we're entering earnings season. And typically, you will see stocks beat earnings estimates that are purposely set low so the stocks generate good news. And there'll be some excitement on the television. And it's easy to just focus on what's going on in a single day in the stock market and get either too excited or too negative about what is happening. When the fact of the matter is, we've been in a correction in the market since March, the beginning of March. The Nasdaq has been dropping just about every week in the past 4 weeks, and the stocks that led the market up until then have been getting crushed. The Facebooks, the Yelps, the so-called momentum monsters, and the biotech stocks all got crushed last month. That fact, you may not have noticed the correction in the market because the S&P 500 and the Dow did okay, but now they seem to be getting dragged down. The bottom line is, I can't predict what the market will do today or tomorrow, but over the next 4 to 6 weeks, I do believe we will see lower prices. And some of the things that are contributing to a high risk of a market correction are the extremely high levels of margin debt accumulated by stock market momentum players. This is a frightening thing, in fact, that's developed in the stock market and carries with it the risk of a violent counter correction in which these margin players get squeezed, eliminated, and forced to sell out. You see, margin people are never people, if they're on huge amounts of margin, they're not able to hold through a violent correction because they get margin calls, and that, for the most part, people at this point in the stock market that are buying things based on investing on valuations or have any notion of balance sheets or fundamentals or anything. They're simply chasing momentum, and when momentum reverses to the downside, they sell, and those that don't sell at first become forced to sell as the correction reaches an end. And I've seen this dozens and dozens of times in my entire career of being a stock market player, and I expect it to occur again. So we've got those two things happening. We've got internal deterioration in the stock market structure with the former leaders now lagging and other sectors rolling over and performing very negative. This fact being masked by the seemingly better performance in the S&P 500 and Dow, which you see on your TV screen all the time when you touch the TV or you go to a website, but you don't see what's going on inside the entire stock market. And it's in a correction, undeniably, and I think it's going to continue. So what you need to do in that situation is be very patient, reduce risks in your account if you're in a risky situation. If you're on margin on these momentum stocks, get off of it immediately. And if you are, it depends on when you bought, what you're doing. I feel personally very comfortable with what I own because I'm not in these momentum things. I'm in a sector which I believe is starting a new bull market, in fact. That's a whole different story. But most people watching this video are not in that situation. They simply trade the things on the television, and that's a risky thing right now. And I want you to get off risk if you're in that spot, and be patient and step back and let things play out for a couple weeks. If you do that, you'll be in a position to really buy the things that are going to lead on the next rally. And that's what you should be focused on, is waiting for things to die out. And what tends to happen is when a market corrects, the sectors that hold up the best during a market correction tend to lead on the next rally and go up the most. And some sectors, if they're positioned correctly, can in fact start new bull markets. And I think that's indeed what is going to happen with the commodities and mining stocks as an entire complex. We saw that happen in February. The mining stocks held up when the stock market dipped, and then they went up tremendously for several weeks in the last half of February and into March. And now as the market has pulled back the last couple of days, they've held up once again, and in fact they're outperforming on the up days that we've seen too recently. I think if that trend continues, and I have no reason to expect it not to, that will be a signal that the market is telling us that when the market correction plays out, these sectors and stocks will totally explode. And because I own these things, I'm not scared of the market correcting. But if I was in the Facebooks and the Yelps and the tech stocks and the typical stuff that everyone is buying, that most people are playing, I would be very, very worried, because that's where the complex of speculation and margin has accumulated in the financial markets, and that's where the highest amount of risk in the market now is. These are things that could very well get very beaten up. But we will see how things play out. I will be here with you, and we'll watch things unfold together as the next few weeks roll on by. And for those that are prepared mentally to accept the reality of a correction and take advantage of it by buying when it's over or being in the right sectors when it's over, they will reap the rewards. And in the long run, it's people who take advantage of corrections and use them to their own advantage that do the best in the financial markets, and those that only become the victims of corrections that lose money. And that's the simple trend of markets month after month and year after year. And I want you to be on the winning side from now on, and not part of the mass crowd that gets sucked in at tops, sells out on bottoms, and just throws their money at stuff with no really rhyme or reason of what they're doing. We are going to go forward, and we're going to invest prudently in these markets. We're going to be in the best sectors, and when markets correct, they give us information. Every day that the market trades, in fact, it gives us some sort of clue to what's coming. And when corrections occur, we get to see where the real strength is in the stock market, and we can know that that's where the best places are to put our money and to keep our money and move money, more money to work at. So that's what's going on, and that's what I want to leave you with today. So I'll be talking to you later, and that's a good update. This is what you need to know right now about the market, and really for the whole month. If you just keep this in mind, you'll be in a great position going forward.